Banks are going on the offensive after criticism by politicians of their lending practices and their record on addressing racial inequality in the country. President Jacob Zuma led attacks on lenders, accusing them of monopolizing the financial services industry. He also asked if they colluded in closing accounts of members of the wealthy Gupta family. Now, MPs are due to question representatives of banks on their racial transformation record in Parliament. The financial system is becoming a battleground for Zuma's drive for radical economic transformation to transfer wealth to the black majority. Now, banks have exceeded targets agreed with the government and labor unions to be 25% black-owned, 15% of which is directly held by black investors. Now, Angelo Coppolas joins us in Johannesburg with more on this. Angelo, as always, welcome to the show. Now, Angelo, is this a witch hunt, of course, following the whole Gupta family saga, or are we seeing President Zuma and lawmakers having some valid points regarding the dominance of the country's four major banks?
Which there is a dominance by the South African big four banks. Although, if you think about it clearly, the Absa Bank really is British owned. They control most of the retail banking sector in the country. There's a new player that's emerged onto the scene in the last couple of years, that's Capitec, and they've turned the establishment business models upside down and are taking huge chunks out of those four established South African players. And it's going to get even worse for those four established players as Capitec enters the credit side of banking. And it's going to take much more of a chunk there. Is it a witch hunt? Well, it does appear that the noise levels were turned up several notches when one by one those big four banks began closing those Gupta-linked accounts. The banks, though, appear to have reacted to their international obligations and increased international risk sanction, or they were facing that risk sanction if they continued to allow the Gupta-linked businesses to operate. The banks have always maintained that that was their key consideration. Whether it's fact or fiction, we're not sure at the moment, and we'll probably only get clarity once those suspicious transactions are completely unpacked, and that's probably going to happen once the court cases between the Gupta family and National Treasury come to a head. So whether it's verified or not, we're going to have to wait and see until that plays out, Ucha.
Now, Angelo, in response to this, we saw the Banking Association of South Africa say it's not resistant to change. Give us some more insight into the state of lending practices and certainly racial inequality right now in the sector.
Well, the banking sector says that they haven't transformed enough. They have in certain sectors, they've met some of those self-created charter targets that were agreed to with government more than a decade ago. Transformation is obvious in the lower and middle management sectors of those big four banks, but it's lacking in the senior management levels. On the lending front, the banks say a choice has to be made in South Africa. The banks say that it is either going to make money available to fund new black shareholders, which means that loans to black businesses are going to have to take a back seat. It's all about the technical allocation of capital. For every rand that's loaned to support a new bank shareholder, some 80 rand has to be pulled from the funding of potential black businesses, they say. The association, though, was quick to point out that it plans to set aside some $8 billion to finance black businesses. That initiative, though, is still light on details. Not being a banker, I'm not sure about the technicalities, but those are the realities, Ucha.
Now, Angela, as we said earlier, Parliament did hold hearings on racial transformation in the industry today. What was the outcome of that?
I chatted with Cas Kuvadia, who's the CEO of the Banking Association, and he classified today's hearings as robust and collegial. He told me the association wants more interaction with the Finance Subcommittee on a regular basis so that they, as he put it, can interact more substantively. The big three banks were present today. The fourth big bank appears, I think, on the 22nd or 23rd of this month. And there was also a huge investment association which represents all of the investment businesses in the country. The Black Business Council was there, and of course the Banking Association. They talked transformation, and he's happy with the pool, this is Kuvadia, of junior management in the big banks training programs. He says we'll start to see those in the next 12 to 24 months as they permeate up the management chain. The issue of ownership, though, was talked about, and he's adamant that regulators locally and internationally want institutional investors with deep pockets. they don't want individuals or small groups. And I think he's referring to the Stokvels and people who coming together to invest in those banking groups. That's in case what happened in the US and Europe in 2008 with that banking collapse. And the regulators want to go to the institutions and not to the taxpayers to try and bail out those banks. So according to Kuvadia, it was robust and collegial, and we'll probably see more of it. Ucha?
Well, as always, Angelo, many thanks for those insights. Angelo Coppola joining us there in Johannesburg.